Everyone is freaking out about this new idea of the 50-year mortgage. Some people think it'll make LA homes more affordable. Others think it's a disaster waiting to happen. I ran the actual numbers for a real Los Angeles home, and what I found shocked me even more. Hi, I'm Keena, your Los Angeles Realtor, helping buyers, sellers, and relocation clients make smart decisions in this insane market. And make sure you watch until the end because the payment difference between a 30-year and a 50-year mortgage is not what lenders are making it sound like. And it could affect your ability to qualify. Let's get into the numbers because this is where the truth actually shows up. What is a 50-year mortgage? A 50-year mortgage stretches your repayment over 600 months instead of 360. Why does it matter? Because lenders qualify you based on your monthly payment, not the price of the home. So the big question is, does a 50-year mortgage significantly lower your payment or only by a tiny amount? Let's run the numbers. Let's actually use a realistic LA example. Let's say you're looking at a home priced at $900,000. You're putting 10% down, so that's $90,000 up front. That leaves you with a loan amount of $810,000. Just a quick note, a lot of people still think you need 20% down because that used to be the norm decades ago. But lending has changed. Today, most first-time buyers use a 5 to 10% down conventional loans with an affordable PMI. For the interest rate, we'll use 6.5%, which is roughly today's ballpark. Now let's compare using only the principal and interest amount. Option number 1, a 30-year mortgage. Monthly payment, which is principal and interest, would be around $5,125. So total payments over 30 years equates to about $1.8 million. Option number 2, a 40-year mortgage. The monthly payment would equate to around $4,775, and total payments over 40 years would equate to $2.3 million. Option number 3, a 50-year mortgage. The monthly payments would be around $4,600, and total payments over 50 years would equate to $2.8 million. So what do these numbers really mean? For your monthly payment savings from a 30-year to a 50-year, you save about $525 per month. For some buyers, that's meaningful. For others, it's not enough to justify 20 extra years of payments. Your total interest paid increases. You pay over $1 million more in total payments. That's the big downside. You build equity much slower. For the first 10 to 15 years, most of your payment goes to interest. Your ability to move or refinance changes. You may stay equity poor a lot longer. So who benefits from a 50-year mortgage? First-time buyers, especially LA renters earning between $150,000 to $250,000 per year who can't qualify for today's typical $5,000 to $7,000 monthly mortgage payment on a 30-year loan. A 50-year mortgage slightly lowers that payment, which can help them meet lender DTI requirements. Buyers with high incomes but low cash savings. People who need a lower monthly payment but not necessarily a lower home price. Some investors, cash flow driven, though they'd have to weigh in long-term costs. Who doesn't benefit from a 50-year mortgage? Buyers seeking long-term wealth. You lose wealth building through equity. People who move every 5 to 7 years. You never get ahead in principal. Buyers banking on affordability. This won't actually lower home prices. In fact, it might push them upward. So would a 50-year mortgage really lower your payments? Yes, but not by as much as people think. And you pay far more over the life of the loan. If you want to explore what you qualify for, or if you're planning to buy, sell, or relocate to Los Angeles, I'm here to help. All of my contact information is listed below. Reach out to me at any time. Thanks for watching, and I'll see you in the next video.